Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An immediate countering bullish harami yesterday after the previous session's bearish closing black Marabozo. The cap on the market was, this time, the flatlining long moving average, currently 108.35. The first in a wide band of overhead congestion made up of the moving averages plus the 50% Fibonacci line the whole of 2023 at 108.64. The whole band is between 108.35 to 108.83. Further up, we have the important 50% Fibonacci line for the January 2021 to September 2022 move at 109.44. This had been a good capping resistance in recent weeks, and even further up, we have the broken green highlighted lower bull channel line currently at 110.23, or the October 2023 to late January 2024 bull channel. This lower bull channel line also acted in the past as an overhead capping action, and even now I am still wondering if the market will continue trawling along the underside of this lower bull channel line. Meanwhile below, well, we have congestion below, but nothing to write home about until the May 2020 low at 107.66, and the more important April 2020 low at 107.25. So far today, a further gain, moving up off the long moving average, over the short medium moving average, currently at 108.46, and up to test the 50% Fibonacci line at 108.64. Cable, aka sterling against US dollar. A reactionary bullish piercing line pattern yesterday after the recent decline prompted by last week's midweek key reversal down. It was still nevertheless the second consecutive close below the slowly rising medium moving average, currently 126.47, and a third consecutive close below the lower time, currently at 127.10, highlighted in dark blue on my daily chart, of the broken November to December 2023 shallowly bullish shift pitch hook and its reinforcement, the short medium moving average, currently at 126.82. The base of the action was, interestingly, on the combination of flatlining long moving average, currently at 125.88, and the 50% Fibonacci line of the July to October 2023 move at 125.90. Finally, the market is still within the previously mentioned general congestion zone formed between December 2023 and January 2024, between the 126 area up to the 127.75 area. Further below, we have the lows of February at 125.32 and 125.15, the latter apparently being the more significant. Well, so far today, a further attempt higher over the medium moving average and towards the September 2020 low at 126.72. Euro sterling. Another indecisive pattern yesterday, this time an indecisive spinning top to match the previous session's indecisive doji cross. This still testifies of the capping power overhead of the previously highlighted heavy-duty congestion formed from the crossover of the upper trend line, currently at 86.18, of the purple highlighted late January breach but not broken expanding wedge pattern, and the dark blue upper time, currently at 85.96, of November to December 2023 bearish shift pitchfork, plus the recent dead cross of the medium moving average, currently 85.96, down through the long moving average, currently 86.06. Below, we have the combined December 2022 and 2023 lows at December, and in both cases at 85.45 and 85.47 respectively, as well as the flatlining short medium moving average, currently 85.51. Overall, the market still remains within the breach but not broken purple highlighted late January small expanding wedge pattern, currently 85.28 to 86.17. In the recent process of moving higher, the market left behind a similar pipe bottom in March to the one seen in mid-February, leading to speculation on my part that we might have a large double bottom pattern formed with these pipe bottoms. More on this should it have developed. So far today, not much, looking like another indecisive pattern today, right now. US dollar against the Japanese yen. Another indecisive pattern yesterday, this time an indecisive doji cross to match the previous session's indecisive spinning top. The base of the action was once again on the congestion from late February between approximately 150 to 150 and 3/4. Top side, well, we still have the capping pattern, capping peak I should say, formed by the high back in November last year at 151.92. Now, beyond November last year's high, we have the middle side currently at 152.96 of the July to December 2023 bullish Andrews pitchfork, which is highlighted in bright red on my daily chart. We're also, overall, still within the large purple highlighted February 2022 to January 2023 bullish shift pitchfork, in between the middle time overhead currently at 158.58 and the lower time below currently 144.44. Now, so far today, a seeming small pullback lower, but still within yesterday and last Friday's action. US dollar against the CNH, the offshore Chinese yuan. A reactionary bearish dark cloud cover pattern yesterday after last Friday's very strong bullish long white Mariposa and the earlier key reversal up, plus the even earlier 3-day bullish advanced block pattern. We still have the conditions set up for March to be a possible monthly key reversal. Thus, if we close on the 29th of March, and now please be aware, Good Friday is not a holiday in China and the US does not celebrate religious holidays. So if we close on Friday the 29th of March, either over 720.65 or under 718.49, then we'll be on. Right now we're looking at a possible monthly key reversal up. The market's move lower yesterday was capped on top by the neckline, currently at 728.99 of the bright red June to July 2023 head and shoulders continuation pattern. The decline punched down through the broken upper trend line, currently at 723.64 of the blue highlighted mid-January today ascending triangle pattern, currently 722.54 to 723.64. But halted and turned back up from the slowly rising long moving average below, currently at 722.95. That's actually in between, midway roughly between the two trend lines. Now, 2 weeks ago I laid out some ideas for potentials below for the then breakout lower from such an ascending triangle pattern. That's a primary target X is down in the 716.05 zone, for secondary hardest to reach target X1 down in the 710.70 zone. The opportunities below are still severely curtailed right now, but for the moment I will keep those targets on my daily chart, as we've already had a possible false break lower and now a possible false break higher as well. So as I say, I will keep them on for now, but I'm happy to retire them in a heartbeat. So far today, a fresh move lower, but only as far as the dark blue upper trend line of the ascending triangle. US dollar against the Mexican peso. A bearish engulfing pattern yesterday, which wasn't that hard, as the previous session was an indecisive spinning top. The top side was this time capped by the neckline, currently at 1676.56 of the February to April 2021 head and shoulders top. Looking below, we have support from the 2023 low at 1662.11, but overall we are still in between the dark blue highlighted tines of the December 2023 to January 2024 mildly bearish shift pitchfork. We have the middle time overhead currently at 1686.29 and the lower time below currently at 1652.98. There's also some congestion just above where we are now between 1670 and 1680 dating from August last year. Now so far today, well, a small attempt higher, but that was quickly pulled back and we look like an indecisive doji cross right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.